But for the most part, growth stocks have benefited from the decrease in bond yields so far this year, according to research from Goldman Sachs and also according to our eyes. We have seen them go up. The investment bank, by the way, is now advising clients to hold on to high-margin growth stocks while steering clear of low-margin names. For more on this, we bring in Yahoo Finance's Ines Ferre for, what is high margin and what is low margin in this environment?
Yeah.
Ines?
Right. Okay. So let's step back for a second and basically talk about what Goldman Sachs said in this note. They're basically saying, look, we've seen progress when it comes to inflation. We've seen that the Fed has slowed down further its tightening. We have seen the real yields on the U.S. 10-year Treasury go down, and that has helped rally growth stocks. These are, think of the tech names that we've seen rallying. Okay. Well, Goldman is saying that looking ahead, it's recommending to own high margin versus low margin growth stocks. Why? Because they're saying that high margin growth stocks have outperformed low margin growth stocks by 5 percentage points since the recession fear sort of intensified earlier in March. And you can see a chart that they have also put forth showing how high growth, low margin stocks are more sensitive to real yields. So what is Goldman talking about when it's talking about high growth and high margins? Well, high growth meaning sales. They're looking at consensus forward 24-month sales growth, and they're looking at net profit margin expectations. So when they took a look at the stocks that they're saying, maybe you may want to choose these instead of these to hold on to, they looked at stocks within the Russell 3000, excluding biotech, excluding financials, excluding also energy stocks. It has to have a market cap of $1 billion or more and sales of more than 100 million or more. So they're looking at high growth, high margin stock. That means that 15% or more in sales growth and 15% or more in net profit margins. And we're going to show you a couple of charts of some of the stocks that they took a look at. And some of these include, as you would imagine, some of the software names, Palantir's in there, Workday's in there, Marvel Technology. You've got Airbnb, CrowdStrike, AMD, NVIDIA as well. By the way, NVIDIA up year to date 86%. And then taking a look at the high growth, low margin stocks. These are stocks that have 15% or more sales growth, but less than 5% of net profit margins, and in some cases, negative net profit margins. So you're looking at stocks like Luminar, Rocket Lab, Lucid, Plug Power, some of the EV players, DoorDash, Shake Shack, Riot Platforms, Roku, and also Uber is included in that list as well. So what they're saying is, look, if the economy enters a recession, the pricing of growth stocks is likely going to deteriorate, and it has been shown over time that investors reward quality attributes such as high margins, guys.